Welcome back, Alpha Hunters. The markets are rolling on this Monday, magnificent Monday, January the 27th. And somebody, instead of hitting the snooze button this morning, hit the sell button because my goodness, we got some selling today. My gosh. Nice gap down this morning. And if you just kind of take a look at the extended hours, futures basically just traded down pretty much all night. So we'll have to go see what the culprit was. But there's plenty of things moving. Pay very close attention. Like, very rarely do you get days like this on the market where there's so much movement across so many areas of the market. Definitely be paying attention to whatever you're into and any kind of plans or allocations and things like that. Yeah, want to definitely pay attention. So I'm not going to get to everything, but we're going to just kind of try to figure out really what we're seeing today on the market, general market, and then whatever we can see as far as like major reasons why this is moving. Yeah, I'm also going to be taking a step back from doing the channel and stuff like that. I've just kind of been working on other things, but the channel kind of takes up some of my time. So you might have noticed I didn't even get a market outlook video out this past weekend. So I'll still be around for now. And if things change down the line, I'll let you know. But as far as the SPY, huge gap down today. Oh my gosh. 2.15% of a gap down. My goodness. It's been a while since we've seen that. The other thing that's very interesting about this gap down, we hardly ever, I can't think of a time in recent history that you'd have to go look from basically an all-time highs. Like we were hitting Thursday, Friday of last week, where you gap down then like 2%. Like that does not happen. Maybe 0.5%, maybe a 1%, but a 2% gap down, that is super, super rare. So that's one reason why I'm saying you definitely want to be looking to see what is going on across whatever things you are interested in. The Qs had a huge gap down. When I first saw it this morning, they were down over 3%. So there is the 3% line right there. So you can see that we actually did open below 3%, 3.5% on a gap down on the Qs. That is huge, huge, huge. IWM, pretty strong gap down here, but you can see very strong buy up. Rotation into the IWM, the Russell 2000 area, even though it's fading back down here over the past hour. Very strong rotation that first 30 minutes. DIA, very similar kind of boat. Nice strong gap down here. Got bought up. He was hitting day highs just about 20 minutes ago. And yeah, other than that, RSP, nice strong gap down. Got bought up first 10 minutes. Didn't quite get positive, got close. You can see it's fading back down outside of that first 10 minutes. So RSP currently down about 0.5%, but yeah, super, super strong moves there on the open. RSP kind of forming an upper wick right now on the daily. Kind of mentioned that, middle part of last week, beginning part of last week, I wouldn't be surprised if we saw a little bit of a pullback into the moving averages. That could still possibly happen, especially with today's gap down. Almost wouldn't doubt it now. I would expect some continuation bearish from today's gap down across other areas, a lot of areas of the market. So that's a pretty large gap down on a lot of areas. So do we make new lows today? I don't know about that, but I wouldn't be surprised if we sell down a little bit more, maybe Tuesday, Wednesday, or something like that. So DIA. Still, a lot of these things, we ripped it pretty hard here in the middle of January, so they're still above their moving averages all across a lot of these markets. So even the IWM here looks like a flag pattern, right? It kind of looks like a little flag pattern sitting right on top of the moving averages. Very possible. Kind of like a double bottom here. The only bad thing is Friday's wick actually did take out last Tuesday's high, so that kind of looks like a false breakout, and now we're reversing kind of look there. This is where it's going to get interesting, the Qs. So the Qs and the SPY formed a very interesting pattern. So as we know, the SPY's actually kind of been benefiting the most. And take a quick look at the SPY. SPY's been holding up pretty good. You know, we had the RSP, the general majority of stocks in the SP 500 kind of get washed out there in December. But the Qs actually held tough and actually was bullish during that time period. So it's a pretty good rotation. And so the SPY never really got hit. And then actually, you know, here in the middle part of January, the SPY was actually pretty strong as there was a lot of, you know, a lot of money just coming in everywhere. Qs did well, and the RSP did well. So the SPY went to all-time highs. This is where it gets interesting. We have higher highs here on the SPY and on the Qs, and obviously the RSP. We have lower highs from December to January, and that is a big deal. That is a very strong move down here on a lot of sectors. So not just the RSP, but I mean the biggest weighting sectors as well. So, man, it does not look good, and it's not too often you get divergences, you know, across some of these markets. Now, I know last summer we were kind of getting that with the SPY Qs type of look, but you know, the Qs, it never wound up leading the market kind of lower. The SPY just kind of made those higher highs there in like that September type areas. We were getting a lot of rotation out of the Qs and into like the RSP and the IWM type areas, right? So when that was going on, the Qs wasn't really leading as much anymore, and but this is a pretty significant gap down. I would love to go back and look and see if we've had a gap down that large, basically from an all-time high on SPY. But I'm not gonna worry about it. I'll let you guys go track that down, because honestly, it could have been a while. It could have been a minute. Here's a look at the heat map. So you got Nvidia down 14%. If you don't, I mean, we saw the Qs and how much the Qs are down. Qs are down big time. So obviously we have a culprit here. Nvidia, AVGO. So someone here in the AI world said something. Okay, so we'll take a look at that. We'll just keep rolling on here with the general market stuff we look at. VIX, obviously, you know, huge move up today. Took out the highs from January 13th. Okay, so wicked above those highs so far today. The dollar continuing a little bit of a pullback here. How much? A little doji action. We do have a pretty good air pocket here now between the. If we wind up getting through this zone of support here, we got a pretty good movement down to this support level, which is basically going to be about where that 100 is. So, yeah, if we get through there, we could see a pretty good drop, continuation down to like that move, 100 moving average type area. Gold, interesting. Gold, flight to safety. You think flight to safety is happening, but people not really flocking to gold, which is kind of interesting because the dollar is also down. And speaking of also down, yields dropped off, wick down to that 50 EMA. Looks like yields are bouncing from there, though. Yep, over the past couple hours, bouncing. Had a nice little drop off overnight. HYG, high yield corporate bonds continuing higher. LQD, nice gap up there. Okay. And TLT, nice little gap up. All right. So, yeah, we're seeing some pretty good movement, which I think right now TLT probably puts it into perspective. Maybe you're moving up to the 50 EMA and possibly this low here from back in November. So somewhere around like the 89.2 to 89.5.6 type zone, maybe 90 there on the TLT. So Yeah, I wouldn't be surprised if we see some higher moves across some of the bonds, mostly because I mean we got to the area on the bounce here from middle of January where it's like we were starting to roll over at the spot we were supposed to roll over, and then obviously now we just got this we just are about to take out that spot where we should have rolled over at. So to me, that says we'll probably just go a little bit higher at least. And I know some people could say, "Oh, this looks like an inverted head and shoulders," and it very much could be. So you're just gonna, if you're gonna play it either way, you just got to make sure you have those stop losses in place. And I mean, that's all you can really do. So as far as man, we're gonna have really a lot of fun here. So as far as sector rotation, you can see utilities and tech. So okay, so we're gonna have to take a look because these are the two areas that have been really hot over the past year and a half. Utilities and tech, especially nuclear utilities. Okay, so those two are getting hit quite a bit. I mean, you see both down over 4%. Jeez, that's brutal. Utilities actually didn't get hit as much on the gap down. You can see they gap down about as much as the market, but they've continued to sell off during the day. So definitely take a look into that. Industrial is kind of in line with the market. Energy is a little bit outperformance there. Materials, real estate, discretionaries, financials, communications, all outperforming on the day. Actually, some of those are positive. And then you got healthcare and staples at the higher end of the day. So flight to safety right there. As far as intraday price action, so there you go. There's that utilities not gapping down as much, but seeing a lot of intraday selling. So pay attention to what's going on there in utilities. If you've been looking to potentially buy the dip, you looking for good entry levels, take a look into some of those areas, see what looks appealing, and that kind of stuff. Energies also underperforming intraday. Materials, real estate, industrial, staples, tech, financials, and healthcare all underperforming intraday. Okay, discretionaries and communications are the two sectors actually doing pretty good intraday. Now it is kind of interesting to note because these two are also part of the big tech area with Meta, Amazon, Tesla, Alphabet, in these two sectors up here. But you can see tech down here. So the big difference between these two and the actual tech sector is basically going to be your semiconductor stocks, which what we kind of briefly looked at. A lot of semiconductors getting hit there. AAPL is actually holding tough. Meta's actually doing pretty good. Where's Tesla? Tesla's down a little bit. Amazon down a little bit. Okay. So you take a look at the quick headlines. NASDAQ leads sell-off as AI fears rock tech stocks. So that is definitely going to be the obvious thing that you're going to want to take a look at. What is it that's spooking the investors? Is it going to spook you? Is it an opportunity to buy the dip? You definitely want to make sure you really understand what is kind of going on here. As far as just the general market, though, that is a brutal day. I would definitely expect us to go at least a little bit lower. Maybe Tuesday, Wednesday, Thursday. It depends on what happens here over the next couple of days. But I would expect us to take out the low of this morning. Maybe not just drop 5% or whatever, but go a little bit lower. But I would definitely keep an eye and see how quickly we do that. If we just kind of mellow out here today, kind of mellow out, maybe roll down a little bit by tomorrow afternoon, I'd be willing to be a little bit bullish on that, just because it doesn't seem like people are panicking. It's more of like a controlled sell kind of thing. People are just like, I'm going to de-risk a little bit. The panicking selling, that's where you got to be really cautious, and it doesn't seem like we're getting that. People bought the dip on the open, so I wouldn't be surprised if we roll down a little bit, take out the low of the morning, but also would imagine if we do that, maybe later today on Monday or Tuesday, or maybe if it's slow enough on early Wednesday, I would be looking to be maybe a little bit more bullish on that. The other thing you got to be mindful of is Fed day is Wednesday. So, yeah, we are going to get Fed interest rate decision on Wednesday.